Just in time, Cody. So I don't know if you can see if you're on the actual YouTube website. I think maybe that's where you can see it. It should list the stream time. So today's time was I think I said yesterday 9, but I switched it to 9:10 today. So we'll get started in a second. Can everyone hear me? Loud and clear. Just give me some feedback. Can you hear me? Can you hear me? Mic is off? No. All right, cool. All right, so we'll get started in a second. I'm just gonna reshare this on. Sounds like a mic is on a webcam. Give me one sec because I did just change a couple things. How about now? Sound better now? Down mix to mono. Should be better now. All right, the mic is not off, so ANSC and Corey Campbell, quieter. All right, let me turn up the gain. Much clearer, good. Don't joke around and say the mic is off. I don't know if you guys were joking around or you couldn't hear me on your end. But we try to get this obviously out of the way in the beginning. So I don't want to fuss because, and you know, not to pick on anybody, but if you do joke around and say the mic is off, anyone who's been following for a long time knows that we've had mic problems in the past. And I might just go ahead and spend, you know, the next 10 minutes trying to figure it out, because that's happened before where we started streams and like spent 20 minutes trying to figure out a sound issue. Okay, so now let me reshare this on Twitter and we'll get started. And I'm just looking through the chat right now. I'll change the screen in a second. Hope you guys are doing well. Cool. All right. And let's get started. All right. Thank you for joining. We'll get out of the get the formalities and pleasantries in the beginning out of the way in a second. I have 2 screens set up, so I just redid my Streamlabs. So it is the early New York session. So should anything pop up, any of the setups or opportunities that I cover this morning, if any of them should rise, we will rise to the occasion and trade them. So I have, if any of them will rise, we'll rise. That did not sound like it made much sense. So let me get this out of the way now. Well, I'll leave this up for 1 sec. So I have a little setup, as you can see. The YouTube channel will not be there. I have chart set up. You'll be able to see trades pop on this. So just for example, I will long dust and you'll see that 0.001 pops up. So if we'll flatten that out just to show you to leave a mark on the chart. So entry and exit. So should anything arise, then we'll take some trades during the stream. All right, back to the other screen. Okay, cool. So thanks for joining. First and foremost, if you are new to the channel, please hit the like button, hit the subscribe button. This is a new YouTube channel, and I'm going to be spending a majority of my time on this channel. You should be able to see there is a rolling scroll bar on the top. So this stream is sponsored by Phemex. So I have a new link now. So trade Phemex.com. And there are 6 promotions that are currently running. So I've been partners now with Phemex for going on 3 years. This is a new link though. They're going to set up new bonuses for users that use this link. And it's a phenomenal exchange. Honestly, it's extremely reliable. You know, anytime that you share an exchange that is really reliable, people say something along the lines of, yeah, well, you know, no one's trading on it. There's not a lot of volume. That's complete nonsense. There's over $11 billion in volume traded every day here. There is plenty liquidity for 99.9% of people that are concerned, right? So you have plenty of alts, you have spot, you have futures, and they have all of the new popular listings that are being shared on Twitter and that people are most frequently trading. So it's a phenomenal exchange. Again, I'm partners with them. If you use that link, there are currently 6 bonuses that are running. And if you do sign up and you don't get a bonus, make sure that you reach out to me. So again, the link is above. It'll be scrolling as we are streaming. So let's get into it. Yesterday, I streamed around the same time. I am based out of New York, so this is after New York Open, and both setups for BTC ended up playing out, and one of the setups for ETH ended up playing out as well. So this is just an entire look at markets, what is relevant lately. Obviously, we have BTC, we have the ES. Again, that's the E-mini futures contract. That's S&P index futures. So I chart the ES. I commonly will refer to it as the S&P, but it's the symbol is the ES, but it's just the futures instrument. So again, it's going to trade outside of the cash session, you know, and after the S&P closes, right after 4 p.m. Eastern Standard Time. Then we have crude oil, ETH, the dollar, because that's become a lot more relevant. It's always relevant, right? But there's basically one trade right now across all markets. So we're focusing on the dollar, the NQ, right? The NASDAQ, again, futures. And then we have the US 10-year and the 2-year, right? So looking at yields. Now, very significant move, obviously, post CPI. The next major event that we have, so listen, the markets right now are very event driven. They're catalyst driven. There's a ton of headline risk. So more recently, we had a CPI release, right? That came in hotter than expected. Almost everybody, and even myself included, right, was on sort of the same side of the boat that we were going to see an improvement. You know, gas prices down, commodity prices down, but nevertheless, CPI came in worse than the month prior, showing that it's not just a downward trend necessarily. Doesn't mean that this has to indicate anything for the next couple months, right? This is 1 month CPI. This is last month's CPI, but the markets responded very poorly. And again, there's no really, it just, if you're on Twitter, if you're paying attention to the media, 99% of people were on board with the fact that we were going to see an improvement. So you can imagine there's not a lot of hedging. There were a lot of people that were long into this. Again, you know, long into something expecting an improvement, you might still, you know, you still might see a negative market response because, again, it's sort of buy the rumor, sell the news. But even like the White House, right? So the White House had previously, before poor numbers in CPI, even ones that were not that poor, they've come out and made statements. And it's almost like they were, you know, preparing markets, preparing the American people, even when it was sometimes, again, just like kind of a nothing burger. Well, it's bad, right? You know, obviously inflation is high, but when there was no really significant change from the prior month. And the Fed has been doing similar activities where it's been providing, you know, forward guidance almost to the point where they're saying exactly what they're going to do. A few times they've done that. But again, right, markets are very headline driven, very news driven. It is all one trade right now, so this is our primary focus. This chart that you're looking at right here, this is a calendar. This is provided from Forex Factory. I don't, work with Forex Factory. I don't get anything for sharing this. Again, I'm only partners with Phemex. I've only had one partner for the last 3 years. But this has a phenomenal calendar for the environment that we're in right now. So if you go to Forex Factory, we'll just backtrack this because you're not going to see this right away. So you go to Forex Factory, and then we're going to go to calendar, and then we're going to go to crypto calendar, and it's called cryptocraft.com. So it actually takes you to something somewhat separately. But this compiles all of the dates that are very significant traditional market dates, right? So if you're trading legacy, the very significant days, especially if you're a shorter term trader, are non-farm payroll, FOMC, CPI. There's a ton of other labor metrics as well, besides non-farm payroll. But you're going to be focusing on a lot of these news events, and clearly, since crypto is so heavily correlated to legacy, now there's a ton of news trading that you could take part in crypto as well. Especially on the short term, on the shorter time frames. So this has built a calendar around those dates that are very significant for TradFi, and the dates that also, we see are very significant for crypto. So the next one, obviously, that should be on everybody's radar, if we go to more, is the FOMC. And the benefit of this platform is you immediately can see, where your focus should be based on the color of these arrows. So from, yellow through, orange or amber to red, to a darker red, it shows the level of importance and potentially the level of market impact that these releases can have. So next one is FOMC. Honestly, who knows what kind of conditions we're going to be into that. I mean, we'll just start taking a look at the chart right now. This is BTC. A couple setups happened yesterday in BTC. The red line is a line that I drew during yesterday's stream. Markets as a whole, very significant pullback. Ideally, if this was very bullish, I already went. I'm not going to go, because I'm doing 2 streams in a row now. I'm going to be streaming more frequently. I don't want to just go over everything I gone over in previous streams, but talked about why I was still shorting this after this big initial drop. The idea was it's just higher. It's very likely falling into a structure like this that you're going to cover that entire set of inefficiencies. But if this was to remain bullish, ideally we should have seen that the top side of the structure, or at least favoring the top side of the structure, acted as support, right? So instead, if we're looking at this like a composite, like a range composite, and we're just going to kind of bracket off where value is, which is right here. Okay. You saw we chopped around the top side of that. Yesterday during the stream, I mentioned that if we're going to accept into this range, we're probably going to revisit the low. We had that. We've seen a throwback. So there was 2 trades that I'm going to go over in a second. But the market is still favoring or sort of consolidating against this level. So big picture, it doesn't look bullish, right? And after a very significant move in equities, and again, sort of everyone taken by surprise, I think that we're due for a bit more exploration downward. Ideally, if you're going to get bullish, you should see at least the market reclaim something like 20,500. If it does that, let's say it does that during the stream, well, then we have a different set of opinions, right? Then we're looking at probably filling out more of the structure, as I said yesterday, getting back up to 22, and then maybe at that point we would make some kind of lower high up there. But not necessarily looking that good right now. Merge passed, right? The merge passed. ETH is seeing a bit more selling. Okay, so ETH is down more than BTC. Go figure. I thought this was going to be a sell the news event, period. Right? There's a lot of hedging. Yes, funding is very negative, but there's probably an equal amount of spot that's owned as well. If we consider those positions delta neutral, after the merge, those hedges, yes, closing those out would lead to positive price action, would lead to a move up. But for anyone who just wanted to capture that and then get flat again, it would imply selling spot as well. So you can imagine that those forces, it's possible for them to just kind of equal out, and for us to really not have much to gain from the merge period. I mean, this has been a very well-known event in advance, and usually when you have something that's known in advance, the market has a long time to process that, sort of disseminate that information and reflect it in price. So looking at just a couple charts, and then we'll go to how yesterday's trades unfolded, and we'll sort of just recap them so that you guys can learn. Daily chart right now, again, top side of this previous structure, not exactly acting as clean support. We've talked about this many times before. If you have an under over structure like this, if you have multiple periods of consolidation that are breaking down, right, the most bullish setup is the complete reversal and wipe of this prior structure, and then a holding of the top side of that. So we don't have that right now. On the daily, we have an inside day setup. So if this closes out this way, we'll have one trade opportunity. Okay, a very simple trade opportunity that has, in this market, it's almost a gimme. So it's a really easy setup to take and act on. So what that means is if we close this daily out, and let's say this is our high, it's within yesterday's high. This is our low, it's within yesterday's low. If we close this out, this level becomes sort of a break point for yesterday's high or yesterday's low. Right? It's sort of it's a very rudimentary break from balance setup. And if anyone doesn't know what rudimentary means, I mean, it's just very basic. We also have, well, we just broke from it, but we have a very balanced 4-hour structure as well. So it's kind of like we've had inside structure, right? So this was inside of the prior, had a break of that, but then another inside structure. We're just funneling and flagging, and we're flagging after a multi-standard deviation move down, the wiped prior structure, and is on the back of what is bad news, right? And now legacy heaviness. So there's many ways that you could look at this and arrive to the conclusion that this probably leads to continuation. All right. Yesterday's setup was pretty basic. So we'll go to the TPO chart real quick. Just looking at BTC. Yesterday's setup was with BTC. As I said in the stream, excess at the low, and I was going to short the break of this ledge. So that was 20K. So the idea was consolidating against 20K. We'd already thrown back into the singles. All right, we actually had not thrown back completely into the singles. Let me open this up just to show where we were. Okay, so we had, it wasn't a three, it was earlier on in the session, just to clarify that. But we had tested this single print region, right? So that gap, market rolled away from there. And during yesterday's stream, we had a poor low and we had a ledge. So poor low and a ledge. The idea was if we consolidated against this 20K level, I said that at least this portion was something you could, I think I said you could take for granted. So between 20K and 19.8. And if anyone was watching, you remember that I specifically said I wasn't going to TP there because I thought we were going to get overextension, being that we were back within a prior range composite. So I ended up TPing just slightly below this low, thinking that we would puke a little bit lower. The idea was the trade setup was from 20K, right? 19.8 was the structure that you could take profit at, that was, I think, the one you could take for granted, right? The most obvious level that the market would come into after breaking 20K. My point to not take profit was, or my reasoning for not taking profit at that level and expecting, you know, just a grab at that level and a reversal, was that we were back within. This was taking place while we were back within. Again, just to zoom out, this prior composite. So that red line was the, you know, ideally that red line would be the area where we would find some kind of balance if we had one. So I ended up taking profit down here rather than here. And it's not a huge difference, right? I'm not trying to like say that it was that significant, but listen, if you're shorting for a $200 move, but you could ideally pull another $100 out of that or 100 points out of that, why not? So I think the conditions were favorable in that sense to just hold on to the short a little bit longer. So BTC right now, we have semi-overlap yesterday, right? So opened up inside of yesterday's value, but you could see, you know, momentum is not really there, right? Momentum is not really there. We broke outside of value briefly, traded up back within, and now we're back outside of value again. So ideally, what we should have seen is if this is a structure that, if this is a stronger structure, usually you're going to see something where if we break outside of value, we have this move lower. I'm looking at the wrong day. We have this move lower, and this is another day prior. We should be able to spend most of our time inside of this prior day value. But instead, as you can see, we're sort of spending more time accepted outside of value, yesterday's value, than anything else. So this just looks like it wants to break down. And I don't necessarily have a setup that I want to take with BTC right now, because there, you know, you always have to kind of keep yourself open for some kind of surprise. This is very balanced. I would rather see some kind of, or look for some kind of acceptance back within. Shit, my drawing tools are all out of whack. Look for some kind of acceptance back within here, or see what happens when we move lower. Let me go down to just a different chart. So this was the break, right? After the short setup that I shared, come on. After the short setup that I shared, right? The long setup that I mentioned would have been a reacceptance back within the structure. So I mentioned yesterday that I picked up some BTC. I longed this consolidation at the underside of the structure, and I actually ended up taking profit at this high. So I still have that open actually. So I'm still, I took profit and then ended up hedging. That's what I meant to say. It's open, but it's not like a real directional bet. This is what happened. We broke back within the structure. So one sec, I'm using hotkeys, but fucking up. Broke back within this balance. Very quickly moved to the other side. And you can see if you zoom in, there was a ton of aggressive buying, but a lot of this was just squeezing shorts. So start squeezing shorts right here. Right, you can see a bunch of longs trapped at the highs or opened up at the highs. A lot of those shorts squeezed out, open interest dropping. And if you look at something like Delta, you could see that the buying activity on the way up is just on the way down. So not really something that necessarily looks like it has legs at that more recent move. And again, now that the merge is kind of behind us, I wouldn't necessarily anticipate that you should be looking up before you should be looking down, right? Again, though, we have, you know, it's not horrible. This is after a strong move down. It's possible that we, you know, form balance over the next couple days, and that this is just one period where we're accepting out before reaccepting back within that value, but it's not necessarily that good looking right now. You guys following along? Let me just pop out the chat real quick. Background music is loud. Yeah, I'll turn that down. Just going through the chat. Phemex is super illiquid. I haven't had any problems with the pairs that I've been trading on it. So unless you're trading more size than I am, obviously there's a lot of pairs that, listen, on every exchange you're gonna have different levels of liquidity for different altcoins and majors. But listen, the majors are plenty liquid as far as futures go. I mean, you have to consider whether or not you're trading BTC margined or USD margined, but it has been improving over time. And then when it comes to alts, the alts that are very liquid are the ones that are more heavily traded. So value shifting lower. That's right. Yeah. So just to recap, ETH. Again, I don't have any setups right now in the short term. ETH is doing what. ETH is cleaner than BTC. That's what I mean to say. I was saying this yesterday too. ETH is cleaner than BTC. You know, ETH, we have 2 back-to-back days of value overlap. So I think the setup actually is probably a little bit clearer with ETH. You know, we rotated back into single prints. You know, they merge. Have excess at the high right now. So a good selling tail above yesterday's high. Back within value. Honestly, a break of value and holding below 1580. I think that you have a short-term play at least back to the lows. You know, it's not like we have any kind of major rejection at these lows yet. And now the merge is come and gone, and you can see sort of the market's response. It's not something that, listen, it's something that's beneficial over the long run, but in the short term, I think we've probably seen most of that effect play out. But as far as yesterday's setups go, so the idea with ETH yesterday is I had, for those of you that are watching, I had a couple alerts set on BTC and ETH. So if you guys missed that, go ahead and watch that stream. But one of my alerts for ETH was just a break outside of the current day's value. So it was at 615. Actually, are those alerts? Yeah, here we go. So there we go. These are the alerts I had yesterday. And one of them was at 615, right? It says 615.11. But the idea was ETH was a lot cleaner than BTC. And being that we hadn't had any kind of major press of these singles, right? And that this is a gap, that this level, I emphasized, this level was the area where we would look for the best risk reward for a long or a short, depending on the order flow at that level. So if we were able to accept above, this was 636, we would look to see, we would probably see the market cover this entire gap, right? So if we were to accept back above 636, we'd probably see a move very quickly to 670. My alert was down at 615, right down here. Now, my point was that there was a long, and again, this is all in the stream yesterday. There was probably a long from here, at least to here, right? So, break of 615. Here's our profile. 615 is right here. It was yesterday's value. It was a consolidation that we were spending most of our time under. Okay. And here is the reclaim at the top side of that level. All right. So there was a strong move off of that level. Obviously, we never, got to the point where we got back up to 16. What was it? 70, I said. But this was a good move that you could get behind if it was just the initial move or the multiple pullbacks within, while it looked like we were possibly going to move higher. So very easy technical setups. The markets right now are trading, trading very technically. As important as the fundamentals are, markets as a whole, right? So I'm not just talking about BTC. I'm talking about the S&P as well. What do I look for when I look for acceptance? So if we look back at this retest, right? So break and retest. You have an initial break and retest right here. You have a larger pullback right here. I talk a lot about the concept of sold and hold. So we'll go to that. So this is a 3-minute chart. Oh, I thought it was on a 3-minute chart. Sorry. What is my other chart on? Okay, no, sorry. I'm looking at this thinking I'll usually will have either the 3 or the 1 minute as my lowest time frame chart. So come on. There we go. think I had it originally, but I think I switched away from it again. There we go. So I say sold and hold. Right? I've repeated this kind of phrase multiple times at this point. You know, in multiple streams. That's my point. So ideally, what you have is you have in a pullback, right? If you have a market break above a level, you see that that level is aggressively sold, right? So if I have like a candlestick here, you know, I guess the best way to draw it would be like, here's the level. And these candles are, I don't have to draw it actually. I could just change the color the candle color so you guys can see where the actual bodies and wicks are. So this is sold and hold, right? So here's the break above. Here's the initial one. Sold, initiative move out. But this is that larger pullback that looks a little bit more substantial on TradingView. The level is aggressively sold into. And then we have an initiative move outside of that. Right? So the point is, if there is selling that comes into the market, what kind of effect is that having on price? Right? So if you have, again, a level like this, market breaks up, and then we have some kind of retest, and then at that level, there's a bunch of selling volume, and that's just kind of to draw the bid ask. If that selling comes in, and now we're able to see initiative response out, and then we have future selling come in that holds, and the market is still able to move higher. I drew this yesterday, so it's probably better to look at it. It was yesterday when I drew it, it was a transition of small boxes, right? Level is sold. The move out is sold as well, but now we have a market that is able to hold those levels higher rather than continue to move lower. So it's paying attention to the footprint. You could pay attention to, again, if you want to use time-based acceptance, that's a different thing. But, you know, like I said yesterday, the problem with, you know, time-based acceptance is my point was when you are looking at possibly moving through a gap, you don't really get a lot of time. And I think what I referenced was BTC's move down here. Yeah, that's what I was talking about. We were looking at BTC's move down there at the break back inside of the stream before yesterday. The last 2 streams ago, I talked about an acceptance move back inside of this range and how it would probably move pretty quickly. And we'll just go back to that. This is the... And this is not to like toot my own horn again. The point is, this is a 1-minute chart. This was the acceptance back above the level, flagging, selling, still holding higher. If you waited like 15 minutes to see this, you know, if you waited for a longer time-based acceptance, then, you know, you might be wondering whether or not this satisfies any kind of requirement, because there's no pullback. There's none of that unless you really zoom in. So that's where I like to look at something like a footprint, or looking at like a delta cluster, just to see again. And I don't want to make it like overly simplified, because it's not. There's a lot more nuance. But when I talk about sold and hold, market moves up. Same thing if it broke down below level and it was retesting from the underside. Ideally, you see, if you're looking at the bid ask, a ton of activity sold into the level, then you have some kind of consolidation you could go off of. And when you have initiative buying out of that, the next selling that comes in, that let's say it's the same or greater amount than this, still holds above the previous level. Right? So now you're building upon a bid that is rising. You know, if the market is not going to accept into, if this was not going to accept, then we would probably see that this selling would have more of an impact, right? The bid wouldn't be willing to follow this up. If the bid stepped off and you saw, you know, if you saw selling come in like this, then this would, I knew I hit the wrong exchange, because I was, you know, when I was looking at the time frames and getting confused, I'm like, this doesn't look like exactly what I was looking at yesterday. when if that selling came in and the bid wasn't following up, you'd have much more slip. It would have been across a larger area. That's what I meant to say. This all makes sense? Thanks, Boov. There we go. So I look at Bybit and Binance more than anything else lately. So here's the retest of the level. Notice all the selling that came in below, and then we have a strong move out of the level. And if you look at Binance, just fixing the tick. Same thing. So here's a perfect example of sold and hold, right? Ton of selling comes into the level. A lot of selling, less selling, right? Initiative move out, and then here's your sold and hold level, right? So this is the prior consolidation where there was a bunch of selling. Market doesn't rip out of that. Market auctions out of that little level. More selling comes in, but again, now the market is able to hold the level, right? So what we're seeing is there's a transition, and as selling is coming in, suddenly it doesn't matter as much. And then if you look at what happened with BTC at the high, you'll get a clear idea of what trap behavior at the high looks like. So absorption at the high after the spike up. What am I looking at? Oh, Jesus. Getting really confused. That's Binance. That's BNB. So here is so you can see the aggressiveness towards the high, and instead now the selling that comes in is able to take the market lower. We'll put on the volume profile so you see the activity above. See? This all makes sense? Good. All right, that was a long-winded explanation of it. It's not a foolproof concept, right? You could have that happen. You could have selling come in. You could have the market rebound, rehold the next level, and then the market just fell from there. It's not like that's a guarantee of anything, but it is a good start just for the concept of acceptance. Same thing happens at some kind of underside retest of a prior support, now turn resistance. All right, so this is the first of a new series of streams where I'm going to start taking alts. So any kind of suggestions, what you guys want me to chart? Yeah, still holding outside of value. ETH is at the low end of value. So this is good balance, but I mean, we took the high already. So I'm kind of expecting that maybe we put in a lower high here and then move lower. Good volume caught below that low, but I don't know. What's the S&P doing? So it's always important to understand what the S&P is doing because we are still very correlated. For anyone who's unaware of how correlated we are still, go to your indicators, go to correlation coefficient, type in ES, go to futures, add the symbol. So right now on the daily time frame, we're looking at 0.74. So across all time frames, you're going to see that it's very positive. So the correlation is still there, very strong. So at the end of the day, what the S&P does, we're going to expect, I would say, BTC and ETH to follow. They don't have like really anything on their own right now. You know, the merge is a narrative that now has been used. Let's take a look at NEAR, because I was long NEAR the other day. Closed out just over 5. So that one was coming back. And I'm not a fan of round trips. Let me put NEAR on another chart as well, just so I have not only Coinalyze, but we have a profile set up as well. So NEAR looked good. Where did I forgot where I actually long NEAR. I think it was around, it was up in it might have been like 480 region. This daily is not doing anything that BTC isn't doing. I mean, if you look at just high time frame support and resistance levels, between weekly highs close and weekly lows close locally, and then your daily levels, they were right in the middle of a range right now. Same idea as, you know, I guess BTC as well. Top side of a prior resistance level should act as support if we're going to continue to build on these higher lows. So it's the same as BTC, ETH, everything that was strong. We're at a, you know, our most local technical level. If NEAR loses this, I mean, it's probably going to, right? You just look at both spot and future CVD confirming price. Long liquidations are slowing down though, or at least decreasing. OI has been wiped after this move. So we just could be at square one again. I mean, Bitcoin's move too was a wipe of the OI that built up into CPI in the days leading up to it. So here's the increase in OI leading up. Grind, pretty one-sided. And then we reset that. And there honestly wasn't, there weren't that many liquidations from this move, which was surprising. But I mean, NEAR is weaker than ETH right now. I think ETH is weaker than BTC. And let me get rid of this weekly range. We just have this kind of value drift lower currently. So ideally, if you're gonna work off of this support for NEAR, the most obvious transition is between yesterday's lows, where yesterday did the most business, and this little flip right here that is now moving us lower. So if we're able to trade back above something like 1445, you know, maybe we're looking at a better base beginning to build. And then maybe you could start targeting these highs again, at least locally. But it's the same, like as far as bigger picture goes, these share sort of the same fate as Bitcoin in that, I guess, you know, the future is path determined. If we're able to, if NEAR is able to get close to this gap, and you could see the level right around 458, this high volume region. Yesterday, balance moved down outside of value though. If we're able to get back above something like 460, there's not a whole lot that stands in the way all the way back up to $5. But that's not doing it on its own, right? It's doing it that would imply that, you know, ETH and BTC are basically doing the same thing. And that touches on what I mentioned yesterday, which was for BTC that we're probably going to form some kind of balance down here, and that if we accept it back above here, what I say, that high volume level, 20,700, that there probably wouldn't be much in the way of between us and like 22K. So 1,000-point move, because this is pretty much a gap. So it's kind of the same thing with near. All these pairs are so correlated. It's disgusting. Atom. Strong against BTC. Wow. That's impressive. Oh, still at the last technical level I had. Really nice risk reward, honestly, there. That's a really good move. But I guess it's always a matter of, did you get involved at the exact level, right? Or, and I had it back to that high. This was on the chart, obviously, before you asked. Did you get involved at that level? Because you'd be in a better position than getting involved now if BTC and ETH are heavy. Because I don't think we're in a place where there is, from cycle to cycle, things are changing, right? We do have, you know, Bitcoin dominance has gone down a lot. That hasn't seemed to change. There's been more idiosyncratic behavior in alts. So, listen, if you put on some kind of structural stop here, I think that's a reasonable invalidation now, because this is such a clean technical level. At 13.7, 13 level. I mean, if you're anywhere back below there, you have a bunch of lows that have just kind of easily been rewarded with trailing stops on the way up on the daily. So 1, 2, 3, 4, 5 is at a higher low. 6, slightly higher low. 7, 8, 9. You have 9 higher lows. That one was taken. No, we have 1, 2, 3, 4, 5, 6, 7, 8. I'm just pointing out the areas that were uninterrupted, where there was no throwback, even locally, which is dangerous because it just becomes an obvious area for stops and a really easy ride for someone to just drag their trailing stops upward. So everything's pretty much the same story, though. Into the actual CPI, right? Some were looking technically better than others. You had big increases in open interest that now have been flushed. I don't think there's any real reason for crypto to drop much more unless it's legacy, right? But at the same token, there's not a whole lot that's compelling about it on its own. Now that the merge has come and gone, this is spot CVD versus future CVD. They're kind of going in two different directions. But this kind of move is actually a pretty decent setup in process. So for Atom, if you look at it and we just consider it the same way that we considered BTC and ETH, this is the best one, right? So here's your breakdown. Bounce. Really nice under-over structure through. Breakdown. Failed to move lower. Instead, reverse completely through this range. And now, as I mentioned in the beginning of the stream, the best technical level to find support is the top side of that previous trouble zone. So longing here, honestly, with this kind of flag, kind of decent. With a stop below. something like 1440. I mean, I think the risk reward is there. Where's a stupid risk reward thing? Because you're probably at least looking to this little high volume node right there, around 1592. You know, it's a good, this is a really nice structure. Again, market broke down, came back into value, retested the point of control, broke down again, but now we have this sort of under over, and now holding the top side of that, which was a pain in the ass to begin with to get through, to get through, is now acting as support. So at least you have a pretty clean structure, and falling back, underneath into this range just leads back to, leads back through here, because there's not a whole lot that's, we zip through. If you were to fall back under that level, you probably zip back down. So BTC's back inside of yesterday's value. It's not bad. Why isn't this expanding? I want that to expand the actual, hold on, profile. This is not the desktop platform, but yesterday's value is at 20,100. This is so tightly confined right here that a break outside of this consolidation and above probably takes us right back up to yesterday's highs, or the high of yesterday's value. So that was like a break and hold above 2180, or just this region right here, 20,200, saying that funny. That's this ledge. So you notice how this is a weird distribution, portion of the distribution. That's an anomaly, whereas this is much more gradual. So it's pretty Gaussian, right? But it's got an anomaly where it's got this flat portion. So that portion is where the market spent a good amount of time, and that is this even set of highs. So a lot of the times you'll see a level like this get ran because it means it hasn't really been poked through and cleaned up. If you had a poke through that cleaned up quickly, like a grab of those little highs, this would be filled out, right? Instead, we have that anomaly. A lot of times anomalies, single prints, same sort of idea. Breaking above that level and holding probably leads to a move up to around 20,400. So on the candle chart, that would look like a break above this, which is today's value, right? So holding where we've established value for the entire day. And a consolidation like this, just think about the positioning that is involved here, but is not getting rewarded. So once you tip one side of this, you have longs getting involved at the lows, shorts getting involved at the highs. Once you tip one side of this, all of the risk that was involved here, if you imagine just half of it puking, you get some kind of extension because it's kind of, bundled up. But so far, all we're doing is rolling off that region. So it's an if-then statement, right? If we break above 20,200, then probably come and at least take the local high yesterday, right before close. But more than likely, retest the top of yesterday's value area high. The gray cloud. This is a VWAP with standard deviation bands. So this is what I use for the current day to see where value is being established for the current day. So you could think of, and this does line up with it, I have 1.2 to 2 standard deviations. So if I was to go into these settings, so this is the indicator. This is my settings. So 1.2. Standard is going to be like 1, 2, 3, 4. And you can see that I have most of this stuff turned off. And I just have those 2 standard deviations filled in. So what this ends up being is like, it's the current day's value area. So this is VWAP, right? This is basically a volume weighted moving average. So it shows me where risk is averaged out or around the most. And then the standard deviation bands above and below are kind of like our value area high and value area low for the day. So here is, just to give you an example, that 20,200, that is today's ledge, that is also today's value area high. If we look at that on the bands, it is right there. So if I'm seeing, for example, value is being established in a very confined region, and then for the first time, we're able to break outside of that and hold one of these standard deviation bands, whether it's to the upside or to the downside, that's sort of like value migration in progress and us being able to break out and hold value. And you have possibly, in this case, a very balanced day. So you have possibly a break from balance, even though the day is not closed, right? It's not like, we're opening. It's a little bit more concrete when you have a day that's closed out like this and then you're holding prior day's value, but it's entirely possible to take advantage of the same setup because, listen, this much has occurred. It's very balanced. We're back within a prior day's value, so you're looking at least kind of at like a Dalton setup. What is your motivation to do all the work with it? There's really not work. I mean, honestly, FLX, if it got in the way of my life at all, I wouldn't do it. But I don't have a boss. I don't have a job. I've been trading for years now this way, and I have so much free time that I listen, if you can't spare an hour or 2 out of your day, you have an issue to begin with. But there's really not much work that goes into this. The only work is like setting up the stupid Streamlabs and putting like, setting up different windows, but that's not work at all. You see a lot of traders now starting to stream. And I think it's because people actually enjoy talking about this stuff. A lot of people do enjoy giving back, and it gives you something to do, if anything. Because a lot of people that I know have made it through trading. There's a lot of people on CT that are completely, financially free, and they are streaming and they're not LARPing. They're probably bored. They probably we all like the attention to some degree. Like at the end of the day, like not going to sit here and lie. You can't sort of deny your basic human desire for attention. And it's not the reason why I do it, but I would be a fool to say that that's not a small part of it, like subconsciously. Like we're just being honest here, right? Dalton setup. So Dalton setup is it's a traditional market setup. So James Dalton, right, one of the godfathers of market profile, not the creator, but he's written a bunch of literature on trading with profile. I've shared his books on my book list. Old school trader, but TPO, market profile, same thing. It's an old tool. It's all it is. One, it's a tool. It's not a strategy, but it's very old. It was used to trade legacy before crypto, clearly, being around, going back to the, I think, 80s or 70s. And a Dalton setup was, so here's, let's say you have you want to see context, you want a relatively balanced context coming off of. So let's say that this is yesterday. So this is yesterday's value area high. This is yesterday's value area low. And this is trading legacy markets with an open and a close. In legacy markets, right, you have an overnight session. Okay. You can have a case where the market opens and closes, or closes and opens in different places, right? In crypto, where you close your session, you're going to open up your next session. Like, it just picks up right from there. But in legacy, the Dalton setup was that's, I believe it's 70% of the time when the market let's say this is, for example, here's yesterday's open for O. We are balanced. Here's yesterday's close. I was going to write, I don't know why I was going to put P. Here's yesterday's close. Right? Or, no, sorry. I want to keep this legacy first, because the idea that you could close and open up out in two different spaces. Let's say here's yesterday's close, and then overnight session in between, and then we open down here. This setup is, again, best if it's following a very balanced profile or balanced composite, so it could be multiple days prior. But the setup is if we open up outside of value, right? So here is value, and we reaccept back in. And this setup was 2 TPO columns qualified as reacceptance, so like hourly presence. If we accepted back within yesterday's value area, which is this entire range, 70% of the time, it meant that we were going to the other side of value. So this can happen at the high. So we open up here. We accept back within yesterday's value area. 70% of the time, you're going to go from one side of value to the next. It's the same concept I talk about when the market is forming a balance over a range and you break outside of that. This is why I'm always saying with a high degree of certainty that if we accept back within a range, we're probably just going to go to the other side of the range again. You know, if you fall back into, and I've described it as like, if price is ranging, and all right, so just to get back to this. So crypto, wherever you close, you open. So for crypto, I just consider it as a basic reacceptance play. Let's say that we close down here the prior day and we open here. If we fail to move lower and instead we accept back within yesterday's value, I just expect we're going to cover value again, right? It's like the first setup that I look to take. It's better if you have multiple days of value, right? If you have multiple days of balance. But I talk about this a lot, like where we have a range, and if we just did it, right? So it's best to just look at that. This was yesterday's setup. Or no, this was, yes, it was, there was 2 setups more recently. So one, in crypto, it's more, I think it was more actionable. I did like a back test of like 3 years. It was like 76% of the time in crypto, acceptance back into yesterday's value means you're covering value. So you have a very quick setup. But it's the same idea with ranges, right? Here's a range, multiple periods of value overlap. Here's the acceptance back in that range very quickly. It's just very likely you're going to go back to the other side. A lot of times you could assume that price is going to fall back into the same behavior it was in. So your first assumption is not necessarily that this high of that range is going to break. You're going to look possibly for us to fall back into range-like behavior within there. Same setup occurred here on the way back down. So this being the range, right? Accepting back within this range probably means you're going to the low of the range. And this time we're kind of doing it. Last time we went right through. And the way I like to describe it as when price moves a lot in one area, it's kind of like if you're running through the woods or if you're driving over something, you're going to create a divot or you're going to create an opening. I've described this as like the gravity well. And if this is the range, this becomes a very accommodating area for prices. We've carved it out, right? So if this is a range high or range low. And I'm saying imagine this drawn like this. And this is your range, right? This is where value is established. It's carved out. It's very accommodating for price. It's very easy for price to fall back into the same behavior that it was in when it goes back in there. So if this is like a high or a low, if we're able to accept over or through, whether we're accepting through resistance into a range or through support back into a range, this is more likely to just what? Fall back into the same pattern within here because it's kind of carved out. So I don't know. The visualization helps me, kind of, I guess, conceptualize it. Deviation play, yeah. I mean, it's basically the same thing. This all makes sense? And you could go over like all the reasons why it would happen. Right, here's a multi-point touch range. Okay, we broke down, right? You're going to be triggering long stops. So you triggered long stops. Okay, you triggered shorts to open, right? You probably have triggered shorts stops right behind this. So, all right, so you break down through the lows. We stopped out some longs. So longs stopped out where the stops were. Get a little bit of a move. Now you have breakout shorts. Those breakout shorts might have OCO orders to close their positions out. They might be placed back within this structure, back above what would be the support and resistance flip. So if you accept back in there, you're just running back into those stops that were just newly created. And now you're forcing those shorts to close out, and it just helps the move back in the opposite direction. Same thing can be said for, and I did a really extensive video on this concept, on all the things that take place when levels are broken. Same thing can be said at highs, right? Market's confined in an area. Market breaks through. You stop out shorts. You give this move a little bit of gas, right? Now you have longs that are triggered. You have longs that are manually open. When I say triggered, I just mean conditional longs opened up at market, breakout longs. Okay, now you have stops that are placed below this invalidation because this is the level. You might have, trailing stops that are triggered with those orders, with OCO orders, with those longs that opened up. So if you fall back in here, this deviation very easily moves back within here, not because it's just a warm and fuzzy place, but because now you have the invalidation and all of those orders being back within this structure. So it's just a slippery area to fall back into. Adam's not squeezing like I thought it might have in those minutes. Strong move, right? Holding the point of control, grinding higher. It's not done until it's done, but it's kind of clearly laid out now, right? If anything, you would want to see this maintained and then get some kind of squeeze out of this. S&P is still, at the most obvious level of support. This is, as I said yesterday, and I've said many times now, key weekly level and a key composite value area high. So I'll show you the similarity between that. There's your value. Whoops, sorry. Here's your value area high. And that is right at or around that weekly level. So this area, this generalized area, is most obvious area of support. And the S&P, you could chop around a level. It doesn't have to, you can't ultimately assume it's just going to break. Nothing surprises me. Like if we were going to rip up from here and this was a higher low, just be like, all right, well, that's why you don't sell support. All right, guys, but I didn't want to make this too long of a stream because I streamed yesterday. Just wanted to go over yesterday's setups. Not really seeing anything right now. I mean, this is ETH. Looked like we were going to have an inside day earlier on, but that's been cleaned up. BTC has an inside day. So this kind of tweezer. That setup, just in case anyone wants to know how to take advantage of that. Let's say this day closes right now. This is what I'm doing. Taking the high low of today. And you're going to see this will be confluent with value too. Yet there's a lot of times when this lines up with other triggers. That's what I mean. So let's say we close out like that. This is what it looks like on the 30-minute chart. And it's right above that 20,200, today's value. So it's not exactly tight, but the idea behind this setup is yesterday's high, yesterday's low are kind of targets that you could just take for granted. I'd say take for granted when I'm talking about highly certain. So in this case, we mentioned how a break though of 20,200 might be an entry for that 20,004. We're back up to yesterday's highs. So it's actually higher now that I've pinned it on the level. But the break from balance setup is we close out today. This becomes a trigger point to play to that prior day high. And at the low of today, again, this is probably pretty strong because of how tight this consolidation is. And I mentioned breaking out of the consolidation will cause a bunch of positions to fold. Breaking through today's low more than likely leads back down to yesterday's low, and who knows where it goes from there because that's tested again. Or is that, wait, is that the, just making sure I'm lined up on the cross shot. Yes, it is. So a break below today's low, 19,900, probably leads to a pretty quick move to 19,600. But that is a candlestick based setup, right? Inside day setup. Before we even did that, we already talked about these levels and why they would lead to strong moves anyway. So you can see there's a lot of ways to arrive to sort of the same conclusions. Big reversal by the ES. But still chopping around value. All right, guys. I am going to, inside day, I just went over it, right? So if we close out one day inside of the prior day, so here's, yes, the prior day's candle, let's say today closes out inside of that entire range. Then the day that just closes out, its high and low become a trigger point to the prior day's high or low. So break above that high or break below that low. It's a very quick, easy setup that has a high expectancy in this market, or high probability of occurring favorably, I should say. Yeah, and that's it though, guys. I'm gonna wrap it up. Everyone have a fantastic day. Please hit the like button, hit the subscribe button, and yeah, so Mech and I, sometimes the chat lags, I couldn't see. Leave comments below. So leave comments of things, the actual comments, like things that you want me to go over more, things that you maybe don't understand, things you want to see more of in the future. All right. And that's it. Thanks for joining, guys. So that link, again, remember that link, tradephemex.com, that is connected now to new bonuses. So if you sign up, though, and you don't get any kind of bonus, make sure that you reach out to me directly. All right? No bullshit. Adios.